Investing in rental properties can be exciting, but before you jump in, it's crucial to understand the market. One key factor is the vacancy rate. This tells you how many rental units are empty at a given time. Looking at past vacancy rates can help you predict the future of your investment. Imagine you're eyeing a property in a neighborhood with historically low vacancy rates. That's a good sign. It means there's consistent demand for rentals. On the other hand, if an area has high vacancy rates, it could signal a tougher market. You might struggle to find tenants. Looking back at the past 3 to 5 years of data is like checking the pulse of the market. It helps you spot trends and understand the rhythm of the rental world. For example, if you see vacancy rates tend to dip in the summer months, you know that's when demand is highest. You can use this information to your advantage when setting rental rates or planning renovations. Remember, knowledge is power in real estate. By understanding historical vacancy rates, you're one step ahead in making smart investment decisions. Just like a surfer reads the ocean, a savvy investor learns to read demand trends. High absorption periods are like the perfect wave. They signal strong demand for rentals. This is when properties are leased quickly and vacancy rates are low. For example, imagine a new tech company moves into town, creating hundreds of jobs. This influx of potential renters would likely lead to a high absorption period. As an investor, recognizing these waves of demand can help you maximize your returns. You might decide to raise rents slightly or be more selective with tenants during these times. However, it's not just about riding the waves, it's about understanding why they form. Factors like job growth, population increase, and interest rates all play a role in shaping demand. By keeping an eye on these economic indicators, you can anticipate shifts in the market and adjust your strategies accordingly. Remember, the rental market is dynamic. Staying informed about demand trends helps you stay ahead of the curve and make the most of your investment. Imagine you found the perfect property in a neighborhood with high demand, but before you celebrate, consider this. Is there a lot of new construction happening in the area? New apartments and condos mean more competition for tenants, which can impact your bottom line. Think of it like this. If there are only a few restaurants in town, each one will likely have a steady stream of customers. But if suddenly 10 new eateries pop up, the competition for diners becomes fierce. The same principle applies to the rental market. Keeping tabs on new construction projects is crucial. Check with your local planning department or browse real estate news for updates on development in your area. This information allows you to anticipate how the supply of rentals might change and how it could affect your investment. Remember, knowledge is your best defense against competition. By staying informed about new construction, you can adjust your strategies to attract and retain tenants, ensuring the success of your rental property. Population growth is a fundamental driver of rental demand. More people mean a greater need for housing, which is good news for landlords. That's why understanding population trends is crucial for long-term investment success. Imagine a town with a steadily growing population. As more people move in, the demand for rentals will likely increase, driving up property values and rental rates. On the other hand, a shrinking population could lead to a surplus of vacant units and downward pressure on rents. You can find population projections from sources like the US Census Bureau or local government websites. These projections can give you insights into the future of your target market. For example, if you're considering a property in a city projected to experience significant population growth over the next decade, it's a positive sign for your investment. Remember, population growth is a powerful force in real estate. By aligning your investment strategy with demographic trends, you can position yourself for long-term success in the rental market.